Most investors in 2026 will make the same mistake. They'll chase cheap prices, not strong markets. But in real estate, a low price does not automatically mean a smart investment. If you enjoy well-researched real estate content like this, make sure to subscribe to the channel for more smart market breakdown. In 2026, the better play is finding cities where affordability, rental demand, job growth, and long-term upside still line up. And that is exactly why states like Indiana, Texas, North Carolina, Tennessee, Georgia, Arizona, and Florida are getting so much attention right now. Nationally, the housing market is expected to be steadier in 2026, not explosive. Mortgage rates are expected to stay elevated compared to the ultra-low rate era. Home prices are likely to rise more modestly, and inventory is gradually improving. That means this is not a blind hype market. It is a strategy market. Investors who win in 2026 will likely be the ones who buy in cities where the numbers still make sense, not the ones who simply follow headlines. Take Indianapolis, Indiana. This market keeps showing up in 2026 investor conversations because it still looks relatively affordable and buyer-friendly compared with many larger metros. If your strategy is cash flow over flashy appreciation, Indianapolis stands out because it offers an entry point that feels more realistic in today's rate environment. Then you have Dallas, Texas, which continues to dominate serious market watch lists. That matters because major investors usually follow job creation, business migration, and long-term demand. Dallas is not the cheapest market anymore, but it still offers scale, economic depth, and strong investor attention. Charlotte, North Carolina is another name that keeps coming up. Charlotte sits in that sweet spot between growth and relative affordability, which is why it continues to appeal to investors looking for balance. The same goes for Nashville, Tennessee, and Houston, Texas, two markets that keep benefiting from economic momentum, migration, and strong long-term housing demand. And you also cannot ignore Atlanta, Georgia, Phoenix, Arizona, Orlando, Florida, or Tampa, Florida. These are the kinds of markets investors keep watching because they combine population movement, rental demand, and business activity. But here is the catch. Not every fast-growing city is automatically a great deal. Insurance costs, taxes, local competition, and price-to-rent ratios can change the whole story. So here is the real message behind these 10 cities. In 2026, the best U.S. real estate markets are not just the hottest names. They are the cities where the fundamentals still work. Whether you are looking at Indianapolis, Indiana for affordability, Dallas, Texas for scale, or Charlotte, North Carolina for balance, the goal is the same: buy in a market where demand, economics, and rental performance still support the investment. And from my perspective, after going through the data and the bigger market trends, 2026 looks like the kind of year where discipline matters more than hype. The investors who do the best may not be the ones chasing the loudest city, but the ones choosing the market that actually makes sense on paper.